Hello, traders. Today, we're diving into a revolutionary concept that could change the way you approach the markets. We're talking about Anti-Fragile Things That Gain from Disorder by Nassim Taleb. Taleb, a former options trader turned philosopher, introduces us to the concept of anti-fragility, a property of systems that thrive and grow stronger when exposed to volatility, randomness, and disorder. Now, you might be thinking, how does this apply to my trading? Well, buckle up, because we're about to explore how embracing anti-fragility can give you a significant edge in the markets. Before we dive in, let's understand what anti-fragility means. Imagine three types of packages: fragile, robust, and anti-fragile. The fragile package breaks when stressed. The robust package remains unchanged. But the anti-fragile package, it actually gets stronger. This is the essence of anti-fragility, not just surviving stress, but thriving because of it. In trading, being anti-fragile means more than just managing risk. It's about positioning yourself to benefit from market volatility and unexpected events. Let's explore how Taleb's ideas can revolutionize your trading strategy. So why is anti-fragility so important in trading? Let's break it down. First, markets are inherently unpredictable. No matter how sophisticated our models or how diligent our research, there will always be black swan events, unexpected occurrences that can dramatically shift the market landscape. Think about major market events like the 2008 financial crisis or the 2020 COVID crash. Traders who were positioned in a fragile manner, over-leveraged or overly reliant on stable market conditions, suffered greatly. But those who had built anti-fragility into their strategies were able to weather the storm and even profit from the chaos. Taleb argues that instead of trying to predict these unpredictable events, we should focus on building systems that can benefit from them. In trading, this means creating strategies that don't just survive volatility, but actually gain from it. It's about shifting our perspective. Instead of seeing market volatility as purely a risk to be managed, we start to see it as a source of opportunity. This mindset shift is at the core of anti-fragile trading. Imagine two traders. Trader A tries to predict market movements and bets big on his predictions. Trader B, on the other hand, structures her trades to benefit from volatility, regardless of direction. When a major market event occurs, Trader A is at the mercy of whether his prediction was correct. Trader B, however, is positioned to potentially profit, regardless of which way the market moves. This is the power of anti-fragility in trading. It's not about being right all the time. It's about positioning yourself to benefit from the market's inherent unpredictability. Now that we understand why anti-fragility is crucial in trading, let's explore some key lessons from Taleb's book that you can apply to your trading strategy. First, embrace volatility. Taleb argues that systems that are never stressed become weak and fragile. In trading, this means actively seeking out and benefiting from market volatility rather than trying to avoid it. For example, instead of fearing high volatility periods, look for strategies that can profit from large price movements in either direction. This could involve using options strategies or volatility-based instruments. Next, Taleb introduces us to the Barbell Strategy. This involves combining extremely safe investments with a small number of high-risk, high-reward bets. In trading, this could mean keeping a large portion of your capital in very safe, liquid investments while allocating a small percentage to high-risk, potentially high-reward trades. This strategy allows you to benefit from positive black swan events while limiting your downside. Taleb places great emphasis on the concept of optionality, the ability to take advantage of positive outcomes while being protected from negative ones. For traders, this naturally points to the use of options. By buying options, you create asymmetric payoffs, limited downside with potentially unlimited upside. But optionality isn't just about financial instruments. It's about creating flexibility in your trading approach, allowing you to capitalize on opportunities as they arise. Taleb is highly critical of the overuse of mathematical models in finance. He argues that these models often fail to account for real-world complexity and the impact of rare events. As a trader, this means being cautious about relying too heavily on quantitative models or historical data. While these tools can be useful, they should be complemented with qualitative analysis and an understanding of their limitations. Skin in the game is a crucial concept in Taleb's philosophy. It refers to having a personal stake in the outcomes of your decisions. For traders, this means aligning your personal interests with your trading decisions. Don't just follow someone else's advice. Understand why you're making each trade and be prepared to face the consequences, good or bad. Via negativa is the principle of improving by subtracting rather than adding. In trading, this can be incredibly powerful. Instead of constantly seeking new indicators or strategies, focus on eliminating bad habits and ineffective techniques. Simplify your approach. Often, knowing what not to do is more valuable than knowing what to do. Finally, Taleb emphasizes the role of randomness in complex systems like financial markets. As a trader, this means acknowledging that some outcomes are due to chance rather than skill. It's about staying humble, continually learning, and not being overly confident in your ability to predict the future. These lessons from Antifragile provide a framework for developing a trading approach that doesn't just survive in uncertain markets, but actually thrives on that uncertainty. Now that we've covered the key lessons from Antifragile, let's talk about how you can apply these concepts to your trading in practical ways. First, let's look at diversification. While traditional advice focuses on diversifying across asset classes, an anti-fragile approach goes further. Consider diversifying across strategies, timeframes, and even decision-making processes. For example, you might combine trend-following strategies with mean reversion approaches, or mix short-term day trading with longer-term position trading. This multifaceted diversification can help you benefit from different market conditions. Next, focus on creating trades with asymmetric payoffs, where the potential gain significantly outweighs the potential loss. This doesn't mean every trade will be a winner, but over time, your winners should more than compensate for your losers. Option strategies like buying out of the money calls or puts can be effective here. But remember, it's not just about using options, it's about structuring all your trades with this asymmetry in mind. Taleb emphasizes the importance of understanding how systems behave under stress. Apply this to your trading strategy. Regularly stress test your strategies using historical data, including periods of extreme market stress. But don't stop there. Use your imagination to consider scenarios that haven't happened yet. How would your strategy perform in a market crash? What about during periods of extreme inflation or deflation? Be wary of over-optimization. Many traders fall into the trap of fine-tuning their strategies to perform perfectly on historical data. Instead, aim for robustness. A strategy that performs reasonably well across a wide range of market conditions is likely to be more anti-fragile than one that performs perfectly in a specific scenario. Understand that small, frequent losses can actually be beneficial. They provide valuable information and keep your strategy adaptable. Don't try to avoid all losses. Instead, structure your trading so that you can absorb these small losses while remaining open to large gains. This approach keeps you humble and your strategy flexible. Adopt a mindset of continuous learning and adaptation. Markets are always changing, and an anti-fragile trader changes with them. Regularly review and update your strategies. Be open to new ideas, but always view them critically. Remember Taleb's advice about via negativa. Sometimes, the best improvement comes from removing ineffective elements rather than adding new ones. Finally, apply the concept of antifragility to your own psychology as a trader. Develop mental resilience. Learn to see market volatility not as a threat, but as an opportunity. Cultivate a mindset that grows stronger under stress. This might involve practices like keeping a trading journal, meditation, or regular exercise to manage stress. By applying these practical strategies, you can start to build anti-fragility into your trading approach. Remember, the goal isn't to predict the future or to win on every trade. It's to position yourself to benefit from the market's inherent uncertainty and volatility. As we wrap up our exploration of anti-fragile, let's recap the key takeaways for traders. 1. Embrace volatility instead of fearing it. 2. Use the barbell strategy to balance safety and opportunity. 3. Create optionality in your trading approach. 4. Be wary of over-reliance on models. 5. Maintain skin in the game. 6. Apply via negativa to simplify and improve your strategies. 7. Respect the role of randomness in markets. Nassim Taleb's Antifragile offers a paradigm shift in how we approach uncertainty and risk, not just in trading, but in all aspects of life. By embracing these principles, you can develop a trading style that doesn't just survive market turmoil, but actually thrives on it. I strongly encourage you to read Antifragile for yourself. Dive deep into Taleb's ideas, challenge your assumptions, and discover new ways to build resilience and optionality into your trading strategies. This book has the potential to not only improve your trading, but also to change how you view uncertainty in all areas of your life. You can find Antifragile at Amazon. I've included links in the description below. Whether you're a seasoned trader or just starting out, the concepts in this book will provide you with a valuable new perspective on markets and risk. Remember, in the unpredictable world of trading, it's not about being right all the time. It's about positioning yourself to benefit from volatility and uncertainty. Antifragile provides a roadmap for doing just that. Thank you for joining me on this exploration of antifragility in trading. Please like this video and subscribe to this channel. Until next time, may your strategies be anti-fragile and your trades be profitable.